I'm Chris Preston.
And I'm Brad Simmerman.
Welcome to Street Check, the best two-person podcast in the history of Cabot Wealth Network, which has been delivering investment advice to individual investors for 55 years. Brad, before we get started, I have to ask you a hypothetical. It's not a hypothetical. It's a news-based question. What is worse, a baseball team losing a game and ending their season by a pitcher throwing the ball, airmailing a ball to home from about 40 feet away? Or, and this one will strike close to home for you, a football team losing a game because one of its players celebrates too early, running a ball into the end zone and drops said ball before they get to the end zone, and basically is not directly but indirectly responsible for them losing.
The latter. The
I mean, that
latter
involves
is
your team, so I figured, this is a layup for you. Yeah.
yeah, but it's a mental error, right? If
Yeah,
a
I agree.
pitcher airmailing a ball, it's like okay, bad release.
You know what I'm talking about, by the way?
I
What
don't. I
Phillies Dodgers last night in extra innings 1-1. I think Dodgers basically if the Phillies lose, they lose the series. There's a little dribbler back to the mound, and the guy would have probably pitcher would have had probably plenty of time if he threw it to first, panicked, threw home, and airmailed it. The winning run scored. But I agree, like mental error, and especially like a showing off mental error versus a physical one. Now the stakes were higher in the baseball game,
yeah.
but
Yeah, it's if
yeah,
if you are a fan of the team, like obviously losing the playoffs matters losing a game in the playoffs matters a lot more than losing a meaningless NFL game for a team that's going to finish with a losing record. But like one is pressure induced, one
yeah,
is hey,
right,
bad call, high pressure, bad call, I made a mistake. The other is lazy. I
right.
am way more understanding of pressure induced mistakes than I am of like just mental lapses because you're not like you are in the winning position. There's no pressure. If you're
Right,
crossing the goal line, the
right.
pressure is gone. So
Yeah.
totally unjustifiable mistake. The exception I will make is for like Leon Lett back in like the 90s, where like he had recovered a fumble. If you
My
were a big
favorite moment, Bill's moment from back then. Yeah.
if you're a big beefy guy that never gets the ball, okay, you get a pass for that one. But if you're an one of the starters on offense, like injury induced, but if you're a starter on offense and you are expected to carry the rock, no forgiveness. You unforgivable mistake.
And I think the respective coaching staffs on the two teams feel exactly the same way as you. Whereas the Phillies pitcher who threw it away immediately got condolences from his manager, like, hey, this isn't the reason we lost, blah, 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 sympathy. The Arizona, I didn't see it, but the Arizona coach, what did he berated the player and what did he do? He did enough to get a
I
$100,000 fine, right?
Yeah, I didn't see what he I was cooking at the time and did not see the play live, so I didn't see what the fallout was. Um, but yeah, he did enough to get a fine for it. And like the other thing is like pitchers don't have their jobs because they're excellent fielders. They have the job
Right.
because they
Yeah.
can accelerate a
Yeah.
ball really quickly and deliver it to home plate on a dime.
Yeah.
So it's
Although
like,
this was throwing to home plate, in fact,
yeah, that's true.
from shorter than he usually does. It was. I encourage you to look up that play. It's pretty bad. But yeah, you're right. It was just a physical error under heavy pressure. Okay, let's move on to lower pressure things, the market. Tell people what we're gonna talk about today.
We are going to talk about the ongoing government shutdown and if and when the market will care about it. Jamie Dimon, CEO of JP Morgan Chase, calling for a 30% correction. Uh, we are going to talk about gold breaking 4,000 an ounce. And, obviously, I don't think anything we can say about it is going to be as big of a as going to make as big of a splash as Cliff saying it's going to 10,000, but it could have hit 5,000 by the end of the year. And then we're going to do a jump ball roundtable-ish segment, and we're just going to go back and forth on a handful of topics. Hopefully, a couple of them are going to be entertaining as well.
Yes, we do aim to entertain. When on that note, it's your turn for defend the take. A take that you have 90 seconds to defend, and your topic this week or your take is biotech is the next breakout sector. Again, you have 90 seconds. Go.
Okay, just to set the stage, XBI is the biotech ETF. It's one of the biggest one, I believe. Um, just hit its highest level since the end of 2021. So the sector as a whole has been totally stagnant. But it is gonna benefit from the same sort of tailwinds that we've been talking about with small cap stocks in general. Biotechs burn a ton of money, right? Like it's if you're doing an exploratory discovery, if you're trying to derive new drugs, all you can do is burn cash and then hope that it pans out and works. So you need to borrow money, you need liquidity. Ideally, you need to do it when rates are favorable and companies are comfortable sort of extending credit. Same way with all the other small caps, right? So borrowing needs to be looser. Um, the thing that has me really bullish on it is actually one of the few arenas where I think we can see a pivot in the AI narrative. A lot of discussion in the market lately is something that we've been talking about. The AI trade is tired. Where's the money coming from? Where's the revenue coming from? All these companies making chat bots and integrating them into businesses or trying to sell them as like a software as a service. It's not panning out. It is not generating revenue. That narrative is getting tired. But if you are investing hundreds of billions of dollars in AI and you need a place where you can point to actually effective use of the pattern recognition sort of sweet spot that AI hits, biotech and material sciences are two that are really big. Biotechs have been one of the leading patent file sectors for AI based
Time.
companies, top five. And I think that's going to be a convenient narrative to sort of push that AI momentum into.
Okay, I gave you a little bit of, it was more like
Yeah.
105 seconds, but that's all right. Um, yeah, yeah, I like that take. XBI, as you mentioned, it is up 16% year to date, but way below, still well below. I think February 2021 was the top, at least for XBI, 166, 167 range. Dipped as low as 64 in late 2023 and is now up above 100 again. Having a decent year, but nowhere near its peak. So yeah, seems like there's plenty of room, at least from a technical perspective, for it to run. And I like the fundamentals of the reasons behind it that you described.
I think that, the other catalyst or the other sort of catalyst that is maybe operating in the background is the onshoring of everything, right? Like the
Yeah,
government has expressed a preference for domestically produced goods, domestic natural resources, et cetera, et cetera. Um, Pharmaceutical, if there's more pharmaceutical manufacturing in the US, that's going to help the pharma companies. But biotech, if you're predominantly operating in US labs, has less infrastructure build out than like a pharmaceutical supply chain, like a manufacturer.
yeah,
So if you are, if you are a pharmaceutical company, there's probably more opportunity to buy domestic manufacturers and show that sort of commitment
yeah,
to onshoring, at least your R&D. Um, they're sort of big picturey, narrative-y things more than like individual fundamental like drug results. Like I don't know what I mean, obviously the FDA is probably gonna well, I say the FDA is gonna just blanket approve stuff because regulation and oversight has sort of gone out the window. But this is obviously a weird administration when it comes to drugs. So maybe that's the hurdle that's in place that I'm not looking at. But I think narratively and I think big picture, it lends itself to a favorable environment for biotechs.
yeah. Good take. Okay, let's move on to our big three. Number one, starting off, government shutdown enters week two. We officially
Yeah.
entered week two on that. Market still doesn't seem to care. Hasn't moved the needle much. People don't seem terribly concerned about it. You laid out last week, all the data from previous shutdowns where stocks were mostly up or, at the very least not down. Um, I don't know how long, I guess how long do you think that it could go? This can drag on until people care, or until at least investors care.
I don't know that there is a point at which the market will care.
Yeah.
I mean, like if the government's shut down for 6 months, right? Like if we're seeing people, the big date to sort of look for is like October 15th. That's the first payday for a lot of government employees and government
Yep.
contractors and stuff like that. The White House has floated not not giving back pay to
I think
government
that's illegal,
employees,
from what I
which is,
understand. But yeah,
yeah, that's illegal.
yeah,
The president passed it, and obviously Congress passed a law in 2019 during the first term, making that illegal. Also floated firing like air traffic controllers that don't come into work. Um, so maybe that October 15, and then give people like a little bit of a tail of savings before it like starts hitting the economy. But right now, spending in the economy is being driven by the top 10% of households, top 20% of households. Like that's 50% of spending.
yeah,
Investment dollars are flowing based on not earnings. It's flowing based on, maybe some pie in the sky ability of AI to replace like labor costs
yeah,
in the future. The market is pretty heavily, the market is not the economy, and politics
yeah.
are not the economy. So like the market is two layers of abstraction removed from politics to a degree.
Right,
Um, but right now the market's not looking at bottom lines at all. So for us as investors to really care about the government shutdown, we would not only have to see the impact to the bottom lines of companies and households of the shutdown, but we would also have to see the market care about that impact. So,
right.
right, we sort of need two changes to the narrative.
Yeah.
Um,
In fairness,
if it,
earnings have, we outlined last week, have been really strong, well, recent quarters, and are supposed to be again, 8% expected growth among S&P companies at least. So I mean that has been part of the equation, and obviously the forthcoming earnings season will have nothing to do with, will not reflect shutdown impact because that started literally at the start of the fourth quarter, pretty much.
yeah,
Um,
and
yep,
company management isn't gonna speculate on what the impact of an ongoing
yep,
government shutdown is going to do, unless you're within like a specialized sector that derives a lot of revenue from government contracts or government spending. So you will get some companies that come out and say, I don't know, maybe like a defense contractor, like maybe Lockheed Martin or something comes out and says, well,
yep.
we're going to suspend guidance until this shutdown's resolved because we're not getting new contracts, or right. Like it's sort of in the margins, but for the
I
most
think it
part,
might help, at least from the administration standpoint, because with the government shut down, there's no jobs or inflation jobs reports
yeah.
or inflation or CPI prints, which might be a good thing right now.
Yeah. And there's also been, the president floated the idea of like a $1,000 or $2,000 tariff rebate check to households in an interview
Mhm.
a couple of days ago. If something like that goes out, that buys some time, right? If everybody's getting it. But in the same interview, he said that one of the uses of the tariff funds was paying down debt. Well, that's not happening. Debt is at all-time highs and is continuing to grow. So,
Yep.
like, you have to take it with a grain of salt. But I don't. There are things in place that could sort of stymie the adverse impacts of a prolonged government shutdown. The first impactful date will probably be at the end of next week, and then I think we have to sort of reassess. It's probably premature to make a really concrete call on this, um, but the market historically has done pretty well when you've got a lot of government infighting because then the government doesn't get in the way. But this is a bit of a different, the market these days is a bit of a different beast. It's highly reliant on the government money printer,
Yep.
essentially, um, and converting government debt to liquidity and earnings and income and share prices and like all these other things. So I don't know if it stretches into next year, like
Yep.
if it gets past October 15 and then nobody seems to care. Maybe if we get into December, into January of next year, maybe that's when the market cares.
Yeah. I mean, I do think there are much bigger concerns out there, as far as the market is concerned than the government shutdown. Speaking of, let's go into our next number two and our big three. Someone who is concerned is Jamie Dimon, as you mentioned, the long time. Um, CEO of JP Morgan. He said that he's far more worried than others about a serious market correction, which he said could come. This is where, the headline can often be more exaggerated than what was really said. It could come in the next 6 months to 2 years. Well, yeah, I mean, there's a market correction on average every year,
Once
I
a
think,
year. Yeah.
historically. So this isn't really a hot take on his part. But he talked about, a little more worried about inflation in the US than others. And worried about our position as a less reliable trading partner on the world stage. I mean, he didn't say anything ground. I mean, I agree. If he's talking that will there be a market correction, probably a substantial one in the next 6 months to 2 years. Yeah, I think that's a pretty safe bet. Um, if you said just in the next 6 months, I guess that'd have been a little bit hotter take, but I think it's probably more likely to happen in the next 6 months than 2 years from now.
All right. So I have some quotes from Jamie Dimon. I'm going to gamify this a little bit.
Okay.
He took the helm at JP Morgan in 2006, so right before the great financial crisis, Great Recession. I don't even know, like, what's our standard descriptor for that? Great
Great,
Recession.
Great Recession.
All
Yeah.
right, Great Recession.
Yeah.
So he took the helm in '06, and then JP Morgan was sort of a bailout of last resort for a lot of banks that were failing.
Yeah.
So that with that starting date in mind, I'm going to read some Jamie Dimon quotes or comments, and you tell me what year they came in.
That he calls for this every year.
Okay. Yeah, so these
Yeah.
these are not as robust as maybe they should be, but the decision to gamify this was a last minute pivot.
Yeah.
So he called for another crisis and an imminent recession. What year after 2006? I'll go so far as to say it's after the '08, '09 Great
I'll
Recession.
say 2010.
2015.
Okay. So you
All
waited
right.
a little bit.
Yeah, waited a little bit. He said a hurricane is right out there down the road coming our way. What year did he say that?
I'm going to say 2024.
2022.
Okay.
So he called that was October of 2022. That was right around the market bottom.
The market bottom. The
Um,
hurricane was maybe it meant good hurricane, 3-year bull market.
it's the hurricane, like Hurricane Priscilla, that I'm supposed to be getting rain from right now and haven't really seen any.
Huh?
All right, I'll give you one more. He said it's the most dangerous time the world has seen in decades.
Hmm. I'm gonna say 2013.
2023. So October of 23, most
Okay.
dangerous time the world has seen in decades. CNBC reviewed 20 years of his market letters and commentary and found that he's become more vocal about making these kinds of warnings.
Yeah.
But I have what I think is a plausible explanation. Obviously, he took the helm before the Great Recession.
Hmm.
He saw firsthand that like a recession, a bad market doesn't kill the big banks. It's the black swan stuff that kills it.
Yeah.
So when he is making these vocal warnings, it's because the only risk that he's concerned about is catastrophic risk.
Yeah.
Uh, JP Morgan has been probably, I guess I'll say the best performing bank on the planet over the last 20 years.
Yeah.
Right? Like there's a reason that they were able to backstop all the failing banks in the Great Recession. It's a reason that the federal government went to them to manage these bailouts and these stick saves. They're an incredibly well-run company. Their risk the leadership sort of starts, or their risk assessment starts at the top. And I think a lot of what Jamie Dimon there is doing there is posturing and is sort of signaling to his employees, to the bank, to their risk managers, hey, the thing to be on the lookout for is the big events, the once in a million, or the once in a lifetime, one in a million shots, like these black swan events that come out of nowhere. Those are the things we have to guard against. Everything else will be fine.
Yeah.
But his positioning on this is, I think, acknowledges what actually represents a risk to the firm. So for most of
Yeah.
us, you take what he has to say with a grain of salt.
Yeah. I mean, that was my it does feel like he's always making this. I'm glad you pulled out the quotes. That's a good was a fun guessing game. It does feel like he makes some comment like this, and it usually is when times are good. Makes sense. Well, actually, I guess the one October 2022 was an exception, but yeah, I mean, and he's not the only one who makes bold claims in either direction. That's why, talk about at Cabot tuning out the news, pay attention to the charts, the earnings, company fundamentals, things like that, and tune out the noise. This is the noise. This is noise. Anyone who makes, any big time CEO, or tech oligarch who makes a bold claim about the economy or about the market, take with a massive grain of salt, or whatever, a bucket full of salt, because there's usually they usually have an agenda in saying such things, and you got to stick with the evidence in front of you.
Yeah, I think one of the things that makes me suspect of this market and has had me suspect of this market for the last couple of years is the noise has, it feels like, become the signal,
Hmm.
right? Like government buying individual companies, the AI that's not built on earnings, um, the Bitcoin exploding, right? Like the noise has crept its way into the signal, and it can be real. It can be a real challenge to trade in a market like that.
Yeah.
But I mean, that's why you step back and it's like, all right, well, let's just look at historical returns, right? Time in the market matters more than anything else.
Right.
So I want to be investing. I want to be operating with whatever system I have in place, sort of despite my feelings, with the understanding that the system that I have in place is sort of consistent with my own risk profile, my own time horizon, right? If you're 90 or if you're, let's say, 75, you don't want to be in all equities, just in general. You don't know what's coming.
Yeah.
You don't know what the noise is going to be or what the news is going to look like. So you invest accordingly, and then we can have fun debating the impact of like government policies, or we can watch as headlines get bad or headlines look great. And what we're doing is we're relying on what the long-term performance of the market has been. And
Yeah, and Diamond is right. We're going to get a correction, 10% or more within the next 2 years. I don't think that's, a bold claim. It'd be a surprise if we didn't, but it
yeah,
might not have anything to do with inflation, the economy. You might just do just because, things are quite overvalued, or it could have something to do with something that literally we discussed right before we went on or started recording today. The latest thing that is actually knocking the market back as we're recording this more than it has pulled back in a while is President Trump threatening massive China tariff increase. He says as a retaliatory measure. I guess he just posted something on Truth Social. Anyway, S&P is down about 1.5% as we record this on Friday afternoon. NASDAQ down almost 2%. I mean, that's more than we've seen in a while. So, I don't know. Any thoughts on that? I mean, this is literally like a developing story. So we're kind of breaking news. If at least if we were live, we'd be breaking news here. So
yeah, I don't know. I mean, we're coming off all-time highs, right? Like
yeah.
the most bullish thing that the market can do is keep trading higher and setting new
Hmm.
highs. I would say the next most bullish thing is set higher lows, right? Like the two things that define a trend are higher highs and higher lows. Um, Market's overheated. We've been talking about that for a long time. It is probably the most predicted market correction in history.
Yeah.
Everybody thinks AI is a little bit overvalued, or maybe not everybody. Certainly, plenty of people think that like the AI trade is overvalued and this is all overheated. So, all right, if we get a 10% correction, so, right? Like that doesn't even take us negative for the year.
Yeah.
It would take at this point, it would take a bear market for us to get negative for the year. Not literally, like it would take just shy of a bear market for us to go negative for the year. And well, maybe that's coming. And if it is, great. Keep buying more.
Right.
Like, don't jump in and buy the dip when it's down 1.5% if you're worried it's going to lose 20%. But if you're buying every quarter, keep buying.
Yeah. And it'll be interesting to see what the reaction is. There's knee-jerk reactions, which is what we're seeing on Wall Street now. And then you don't know, even with the, what was it at the beginning of this year? I can barely remember the name of the Chinese AI,
DeepSeek.
DeepSeek. That pullback, like, oh, everyone's like, here we go. Implosion of all things AI, at least US AI. And how long did that pullback last? I mean, it was a sharp one, but it was what, a few days, maybe?
Like a week.
Yeah,
Yeah.
maybe a week. And in the moment, it felt like this is going to be huge. I literally couldn't even remember the name DeepSeek anymore. But we'll see if this latest China spat, you know,
Well,
lasts
the
long
other,
few days.
yeah, the other thing to consider is that the president doesn't have the unilateral authority to impose tariffs,
No.
right? I mean, like that's my opinion. Um, the Supreme Court will make their opinion known at some point. I believe the tariff authority is on the docket. So we might go back to no tariffs. Or the Supreme Court could, carry water for the president and allow him to implement these. I think that would be the wrong call, but I'm not on the Supreme Court. Maybe, I don't know if that's a surprise to you, Chris, but I am not a member of the Supreme Court. So, like, my thinking on it doesn't really matter. One thing that was actually kind of interesting while we're on the subject of tariffs, there was a recent analysis that found that who did it? Maybe Stanford. Anyway, they found that what's been happening thus far, I think, is pretty consistent with what we've been talking about, which is companies are generally taking the upfront hit of these tariffs, but then sort of filtering them out to consumers over the next year to 18 months is sort of the expectation. And the report that I was reading was finding that the sort of terminal tariff rate of around like 10 to 15% would be likely to be pretty manageable and acceptable to consumers with the way that the tariff price pass-throughs have been working. Obviously, if we have, if the president comes out and says we have 10,000% tariffs on China, that's a much different story.
Yeah.
But if this is, a lot of noise and fury, what signifying nothing, and then we end up with 10 or 15% tariffs, the market will just carry on its merry way.
Yeah. So we'll see. I mean, one thing that it is helping are gold prices. Not that gold needed much help, and that's our third topic here. Gold actually had dipped below 4,000 an ounce after topping that for the first time ever about a week ago. Let's see, when did it top? No, just a few days
Earlier
ago.
this week, yeah.
Yeah, earlier this week. Well, back up and threatening new highs after as people flock to gold on the latest tariff dust up. We've talked a lot about gold a lot here. How high can it go? Like you said, neither of us can top when our golden metals expert Cliff Droke came on a few weeks ago and said he thinks gold's headed to $10,000 an ounce and $5,000 by year end. I don't want to step on one of our jump ball segment or topics, but it would not surprise me if gold got to 5,000 by the end of the year, like Cliff said.
I'll defer to Cliff. I mean, like my big take was gold would go up 10%, and it's done that.
Yep.
It's risen 14% in the last 2 months. So if it just sustained its most recent 2 months worth of performance for the next 2 months, 2.5 months, you're looking at maybe a 20% rise. That puts it at 4,800.
Yep.
That seems reasonable to me. I could see gold breaking 4,500 an ounce before the end of the year. 5,000 just seems a little bit of a bridge too far.
Yeah. I mean, we'll see. It's hard to doubt it at this point. But I think if you were if you're considering investing in gold, but you're like, I feel like I've missed the boat here. I don't know that you have. I mean, I think you've
No.
probably missed the biggest part of the rally, but I don't know that it's going to implode anytime. I think just all the factors that are driving gold, the weaker dollar, just, all the things going on in the world that make people want to cling to a safe haven, which gold is the traditional one. Um, all those factors are have made for a gold bull market. And, again, deferring to Cliff, if he's this confident on gold, I see no reason to be, or for
Yeah,
me.
it feels like that saying, the best time to plant a tree is 20 years ago. The second best time to plant a tree is today, right?
Yeah.
Like
Yeah.
I feel the same way about buying gold. Best time to buy gold was 20 years ago. Second best time is today.
Yeah.
Uh,
Yeah.
what's the replacement reserve asset? I don't think it's Bitcoin. Bitcoin is maybe part of it. I think you know, Bitcoin is very too volatile probably to have as a reserve asset, and there's too many risks to it that just don't exist with gold. Um,
Yeah. And, Bitcoin does the opposite. When stocks are down like this, it's down just as much, down 1.5% today. Meanwhile, gold is up, more than 1%. Bitcoin is not a safe haven
I you
um,
know
asset.
I remain somewhat of a believer in the euro as a weak dollar hedge, but the eurozone, Germany's in recession, France is dealing with elevated debt levels and a ton of political upheaval. So what's the world going to do? Like the euro is not particularly attractive. We can't all pile into Swiss francs,
Hmm.
right? Like that's the strongest currency I think on the planet right now. Um, Gold is really feels like the next man up for reserve assets.
Yeah.
If in general people are saying I don't want fiat, like that's part of what's driven the stock market rally, right? Like the U.S. dollar is down like 11% this year. Um, S&P's up 15%, right? In
Well,
dollar,
closer to
in,
10 now, but yeah.
but yeah, so in dollar terms, the S&P 500 is flat this year. Like
Yeah.
if you're a Eurozone investor, Chinese investor, whatever, if you bought the S&P, if you bought a dollar denominated S&P asset, right, you're flat on the year. It's just coming from weak currency. It seems like people don't want currencies right now.
Right.
Um, I like gold. I like gold over the next few years. That seems like a very reasonable play. Right now, I wish I had more gold than I do. I don't feel that way about other assets. A lot of the stuff that's out there, I feel like I'm holding my nose and buying, but gold is not one of those. I don't know if it hits 5,000 in the next 2.5 months, but
Yep. By the way, volatility, the VIX above 20 for the first time in more than 2 months. That's something worth paying attention to because volatility has still been, even
low.
when stocks have had some bumps
Yeah.
in recent weeks, volatility has still been, as Jacob Mintz, who's like our, not only options expert, but is plugged into sort of the history of volatility and when to become concerned. Usually over 20, when it spikes above 20 is when you sort of start to raise your eyebrows. And that's doing it right now in this moment, at least,
Yeah.
dip below by the end of the day, but something to keep an eye on. Okay. We're going to get to our featured segment in just a second. First, I want to tell people about our offer today. Speaking of Jacob Mintz, if you go to cabotwealth.com/street, we're offering, this is rare that we do this. We're offering at a discount access to his Cabot Options Trader uh, service, which we're offering at $1,000 off the normal price for the year. Again, if you go to cabotwealth.com/street, it's a great service. It includes every week. Jacob has an extensive update on all things market and options market, including what he's seeing with his proprietary Cabot, or excuse me, under what is it? The
Option screening.
option screening tool. Excuse me, unusual option screening tool. That's what I was
Yeah.
looking for.
Unusual activity. Yeah. He looks
Unusual
for
options activity. Yeah.
big moves, big investments
Yeah.
in contracts.
So he has an update every week, and then very frequent trade alerts to help you get in and get out of trades, or potential trades that he's monitoring, and the returns are consistently very good. So if you want to sign up for that now, Jacob, who's been on this show many times, a really great options trader, used to work on the floor of the Chicago Board of Options. Um, it is again available at cabotwealth.com/street and for $1,000 off the normal price. Okay. Now we're going to get to our jump ball segment. To help us with that, we're going to welcome on our producer, Madison Robertson. She's going to be the voice of God here if you're on YouTube. She's a little under the weather, so we're not going to make her come on camera. But Madison, thank you for helping
Yeah.
us with this.
Thank you for letting me stay off camera.
Hmm.
You're doing the world a favor.
Well, I think there's usually demand for more Madison on this and less of us, but at least they'll be able to hear you.
We should do like a Patreon version that's Oops All Madison that we're not even on, and see if we can get some paid subscribers for a us free version of this podcast.
What
Yeah,
would you like me to talk about for 45 minutes?
whatever you want.
Yeah,
Whatever you want. Doesn't
Um,
have to doesn't have to do with investing.
well, that's
it's
good
gonna
because
be
it wouldn't.
it's gonna be a
Right.
Bachelor podcast.
Yeah.
Actually, I have not watched this season in a very long time. Chris has watched more recently than I have. So,
Yeah. I think they're doing aren't they doing like the Golden Bachelor thing? Speaking of gold, it's like the old person bachelor.
yes, they are. That I did watch the first season of, and it was adorable.
Yeah, I think there's one going on now. We have not watched
Yes,
that.
there is. I like that you're pretending that you haven't watched all the episodes that are
I have
out.
not watched any of that. I will say that. I have snuck a peek at Love is Blind, which there's a new season of that.
That's a classic. That's
Yeah.
good.
I'm sure you're watching that. I know you are.
I'm not watching anything. I go to bed at like 7:30, 8
Oh,
o'clock.
right. Yeah.
I'll
Yeah.
catch up on it later.
Okay. All right, let's so we've done this before. Just, jump ball, play on our, this podcast being vaguely basketball related. Um, jump ball is there are two things that are pitted against one another, and we pick which one we like more, and it could be used against us in a few months, depending on who's right and who's wrong. But what's number one in our jump ball?
The first one is the bubble more likely to burst first, AI or gold?
I mean, I think we probably just stepped on. It sounds like you don't think the gold bubble is going to burst anytime soon. I don't think it will either. So I think we're both going to say AI here. In fact, I think we were the first people in history to talk about an AI bubble forming. I don't remember a lot of people talking about an AI bubble. What was it, a month, two ago?
I've been talking about an AI bubble for 2 years, it feels like.
What's that? You have been? Yeah.
Yeah,
Yeah, yeah, that's true. Yeah, you talked about it way before I did. But like
but
we really we
yeah,
made that like sort of a featured segment
I
what, a month, 6 weeks ago, and then suddenly everyone was talking about it.
just I do want to just clarify one item though, which is being 2 years early is still being wrong. It's just a different flavor of being wrong. So I don't want people to like hear that and be like, oh, he's bragging about how he called the AI bubble early. It's like, no, I was still wrong, but it was just because my timing didn't line up. Yeah, no, AI bubble's definitely popping before gold bubble does.
Yeah. So
But I don't even think gold's a
let's
bubble.
define popping. Like .com bubble burst popping, or market pulls back 15% or so, and AI, big tech AI related stocks more like 30% type of thing.
It's at least 30%. If this,
In
if
the
the AI,
market or in
yes, yeah,
really? Okay.
yeah, it's at least 30%. If the AI bubble pops, the market sort of fails catastrophically. Not like maybe not like 1980s catastrophically, but it's not going to be a 15% haircut. Without AI data center spending, I think there was a Senate budget oversight committee or something found, I don't remember who said it, but found that GDP would have been like 0.1%. The economy is not growing for the most part. Manufacturing is shrinking right now. Service jobs are growing, but it's predominantly in like healthcare services. The only growth in the economy right now is AI. Dollars have been chasing that. And it's not like there's any kind of residual assets that you'll get. If you have a data center that's 2 years old, half your chips are burnt out and the chips are no longer cutting edge or valuable. right? Like the
Yeah.
fiber boom, railway boom, like all those booms left like residual assets that were really valuable and you could build on later. This is not that. So if
What's your
hopping is
timeline,
down,
Jamie Dimon? 6 months, 2 years?
it's whenever people decide that earnings matter. I have said before that if OpenAI ever goes public, I think that'll do it. But they're chasing like $1 trillion. The $1 trillion problem they're trying to solve is wages,
Yeah.
right? You automate labor, and then so like, what's your pain point where you say I've spent enough? I don't know. I don't know that anybody does. But next year, maybe 2020, like 6 months to 2 years, I guess would be my timeline.
I'm going to say I agree with you that it'll burst, and I think we will get an end to the bull market as a result of this in, I'll say October of next year, a year from now. Market bottoms always happen. I guess it wouldn't be a bottom instantly, but bad things happen in October. So I'll say that.
That's the average age of a bull market, right? It's like 48 months. So,
I
oh
think
no,
it's
it's like
actually
7 years.
60. I think it's at over
Yeah.
60 months. So a little over 5 years. So it'd be technically a, short-ish bull market if it happened. But, we just came off a really long bull market from the Great Recession all the way till the very brief COVID bear market. And then 2022, of course. Um, yeah, I'll say about a year from now.
So if we if we were to, right, so if the premise is all economic growth has been derived from AI spending effectively since like 2022, since like the October
Yeah.
bottom. I mean, that's a 55% loss in the S&P 500 to get back to that level. I don't think it gets there,
No, no.
but I
30,
think that,
30 I could see.
yeah, I think that's probably in the, because it's also not as if AI is adding no value. It's just not the do everything tool that I think a lot of people are sort of hoping it'll be. I mean, I just explained like why I'm bullish on like biotech because
Yeah.
of AI. Like it does do valuable things.
Yeah.
It just doesn't add value everywhere, and it's being bid up and invested in as if it's going to add value everywhere.
Yeah. Well, so was the internet, but that didn't prevent the dot-com bubble bursting. It's not like the internet was a bad idea and let's all sell out. No, it was the beginning of this, huge boom in the internet, but it just got out over its skis the way that it feels like AI is now. So
Yeah.
yeah, I'll say a year from now. I hope I'm wrong. All right, on that cheery note, what's the next jump ball segment here?
S&P 500 higher or lower than 7,000 by year's end.
I mean, I think I have to stick with I said over 7,000 by year's end a few weeks ago, so I can't depart from that. Although the fact that it's pulled back pretty sharply today gives me a little bit of pause in that. But I'll say just barely gets over 7,000 by year's end, which from here, so right now it's 66.56. Um, I'll let you have your take while I calculate that real quick.
Yeah, I think it stays below 7,000. I mean, eh, like I do this, it's foolish and I do it all the
It'd be
time, but
six
calling
and a half
tops.
or like 6 and 2/3% from here. Certainly not nothing over the span of like less than 3 months. But
If we
it
get,
is the traditional best time of the year to invest, November, December at least.
I mean, I could see if like Q3 earnings season is like phenomenal,
Yeah,
and then the
that's the thing.
government opens back up and we get like this backlog of data that shows that the economy has actually been growing really strongly. I think there are things that could happen that would push it over 7,000. That's not my base case. My base case is that we are probably within 5% of a top right now, so maybe we get to like 6,900.
Yeah,
And I think I said 300 on the S&P when we were talking about like what it would retrace to. 3,000 was the number
yeah, that would
that I
be
was going. I
pocket
was
weather.
looking at the
Get to 300.
I was looking at this SPY, which obviously is a tenth of the S&P 500 itself or thereabouts. Um, yeah, I don't think it gets I don't think it has the juice to get to 7,000, barring somewhat extraordinary circumstances. My base case is probably closer to 68, 6,900 as an upside target.
Okay, we differ there. Let's mark that one down. All right, what's next?
Better undervalued sector bet over the next 6 months, healthcare or real estate?
Healthcare.
Healthcare.
You would think real estate just based on the fact that Fed cutting interest rates should be good for that sector. Hasn't proven to be thus far, and I think it's because it's going to take a while to get mortgage rates down. They've been north of 6% here since this is the 30-year mortgage rate. The last time they're below 6% was in September 2022. And they pulled back a little, but still, what, 6.3% ish now. This is like trying to turn around um, a container ship in the Suez Canal. It's going to take a long time. It'll take a lot of interest rate cuts for it to happen. It's not going to happen even with 1, 2, 3 quarter, 25 basis point cuts. It's going to take a while to turn this around. And we talked last week about how, we like healthcare, and there's, some signs that healthcare is turning around. Everyone needs healthcare, especially as the population ages. We talked about last week, the baby boomers aging into, senior citizen status and needing more healthcare. That's not something that goes away, but the real estate market is, held hostage by mortgage rates, at least to a degree, and so are the companies involved, and it's going to take a while.
Yeah, I agree with the healthcare thing, and just expanding on, even if we look beyond like residential real estate, commercial real estate delinquencies are still relatively high. It's all well and good to sort of push people back to the office, but if you're not hiring, then you still got that office space that's going underutilized and is tough to justify.
Yeah.
The segment of the real estate market that I like best would be the healthcare segment, would be,
Right.
high-end labs, would be healthcare facilities, long-term care facilities, like all that stuff. Anything that I like about real estate is already sort of in healthcare. So yeah, I like healthcare of the two.
All right. That was an easy one. All right. What's next?
Okay, this one's a two-parter.
Yep.
Fed rate cuts above or below 3 more cuts this cycle. And then will there be a 50 basis point cut?
I'll let you start, Brad.
For the full cycle, so not this calendar year, I think we have more than 3 cuts.
Yep.
I think we do get down to that. They have a terminal rate at 3%. That's 4.5, 5 cuts away, right? Because we're four
Is
and
it
a quarter
four
right
and a
now.
quarter to 4.5 is the range right now? Is that right?
That's what, 4 to 4.25
Four
right
to
now,
four and a
right?
quarter. Sorry, that was before the recent cut. So
Yeah, so a terminal rate of 3% is 4 cuts away. Yeah, before the end of this cycle, I would say there's at least 4 cuts, possibly 5. Maybe we get to 2.75 to 3. Obviously, a lot. Look, if this tariff news today that's dragging the market down translates to a bunch more inflation, then we have to sort of throw this out the window. But assuming that's not the case, or assuming that the Supreme Court says these tariffs have to go, and we see maybe some goods price compression that makes inflation look better, and energy prices stay down, then yeah, I think you could cut even faster than that.
and any 50 basis point cuts, as Madison asked.
If I say yes, it's because I'm worried about like a deep recession. The Fed
Yeah.
cuts 50 basis points in an emergency. They don't do it for a normal rate cut cycle. No. No, I'm going to say no. I'm going to say no 50 basis point cuts.
I agree with you on both. I think I'll say how many more cuts. So we've had one. I'll say 4 more this cycle before they pause. That's obviously the timeline on that. Yeah, I mean, what constitutes a pause when they don't do it for like a couple months, 2, 3 months,
More than a year.
Well, I
And
mean,
that,
yeah, this was a
right.
year between cuts this time.
Yeah, I would consider this all part of the same rate cut cycle because it's all responding to the same inflationary pressures of,
Right.
2021, 2020, 2022. So I don't know. There may be a technical definition that I'm not familiar with, but I would consider this all part of the same effort. So
Yeah.
if it's more than a year, then that would be my window closing.
Yeah. So I'll say five and no 50 basis point cuts because I agree. I don't think we're hurtling towards a recession anytime too soon. Um, okay, what's next?
More attractive, beaten down Mag 7 stock, Netflix or Amazon?
Netflix. I mean, I think you and I both, that was our favorite Mag 7 stock, a year or so ago, and it's done well. Beaten down is maybe too strong a term here, but it's, definitely well off its highs. Um, so Netflix peaked at over the summer, end of June, early July at 13.39 a share. It is now at 12.39 a share. It did dip as low as um, the mid 1100s earlier this month. It's actually rallied quite nicely the last week or so. Amazon is slightly less beaten down, but it's been just kind of underwhelming for a little while. I know there's, maybe more of a AI play with Amazon or whatever. But I mean, it's flat for the year. And I just think Netflix has more of its sleeve than Amazon, even, factoring in the whole AI thing, just getting into live sports, they like to do the, event style broadcasts now. They did was like the Mike Tyson and Jake Paul fight last year, brought in
Yeah.
however many millions of viewers. Christmas Day NFL games. They just signed on to have the MLB Home Run Derby last year and opening day. I think they have some other stuff in the pipeline, maybe NFL related. But anyway, I like Netflix at this level more than I do Amazon. I'm sure both will go up over the next, year or so, but I think Netflix will go up more.
The thing that I mean, this gets a little bit back to the noise is becoming the signal thing, right? Like the world's richest man is saying, or maybe the world's richest man, I don't know
Depends
how
on the
the
day.
order has sorted out. Yeah.
Yeah.
Is saying cancel your Netflix account because it's woke. Um,
That was part of why it pulled back, I think, a little bit.
yeah.
But I said, so I'll just say, I mean, I have Netflix in my stock of the week portfolio and have for a while. I think it's one of the best growth stocks on the market. I said, like, this is a buying opportunity. It pulled back. Like, it's not pulling back on any real news. It's based on what someone says. Granted, it's, someone with as much influence as Elon Musk, but I mean, given Elon Musk standing with certain people these days, there might have been some, well, buy Netflix in spite of, despite
Yeah.
him kind of a thing. But regardless, I don't think what he says is going to have any real influence on what people like
Yeah.
to, watch their shows, snuggle up and watch Love is Blind, which Madison's pretending not to do, but she does.
I
And
do and I can. I will admit it. At least I admit mine.
I admitted
Pretend like
mine.
you don't watch Bachelor in Paradise.
Huh.
I did. I admitted it.
Oh,
I
So
think on these airwaves.
good.
at the end of the day, I'm going to defer to the trend. In the last 5 years, Netflix is up over 100%. Amazon's up 34%.
Yeah,
Netflix.
yeah, yeah. I mean, I think that's because I just think, I mean, but people do the same thing from their couch, watch Netflix while buying things on Amazon. Um, but I think the live sports thing is like a sort of like their white whale, and they're starting to, you know, lasso it in a little
Yeah,
bit.
they just
So
need to they just need to go out and buy like a prediction market company, like what
yeah,
Kalshi or whatever, and then you can like order Amazon fresh groceries while you watch live sports and gamble through Amazon.
right.
And then all you have to do is use it. You don't even have to worry about the internet anymore. It's just go on to Amazon, right?
Right.
Like
Yeah.
there's a dystopia version of this that's really good for Amazon. But I think the Netflix thing, because like Amazon has Prime and they've got
Yeah.
NFL on Thursdays, but I think they have probably a more limited ability to juice that the way Netflix does. And Netflix has tons of subscribers
Yeah.
all over the planet, and they're also not trying to sell you goods that are manufactured in China that may be subject to 10,000% tariffs or whatever the number comes in at.
Right.
Yeah, Netflix I like better.
Okay. What's next?
Cannabis rescheduling before or after the midterms, or not at all.
This was your baby, Brad. I'll let you start off.
We had Michael Brush on a couple of months ago, and he and I were speculating about maybe cannabis rescheduling happens and it gets, when do you do it? When is it the most impactful? And I thought, leading up to the midterms, um, I don't see I don't see a big push for it. Like the authority is in place to really pursue this if they wanted to. I think it doesn't happen. I don't think it happens. I don't think it happens under this administration. I think that's ultimately where I'm going to land.
I
And
think
it's
yeah,
contrarian, I know.
I think I
Um,
agree with you. I think there's like a 35-40% chance it happens close to the midterms next year.
yeah,
Like if they feel like there's just so support for it is so overwhelming that they just have to do it to appease people, bring in a few more voters maybe, then maybe it happens. But I feel like support for it has been pretty high for a while now.
yeah,
So I could see them, yeah, you know, coming right to the edge of the cliff, or cliff is the wrong expression, but coming right to the precipice of doing it and not doing it. And then they certainly won't do it after the midterms because there'd be no reason for them to do it really. Um, at least
yeah.
during, the remainder of his tenure. So I'll say not at all during this administration.
Yeah, that it's a tough call to make
It is
because you
tough. I
obviously
hope for
still.
Michael's sake and for our, Cabot cannabis investor subscribers' sake that it has happened. And one thing I'll say is like the fact that cannabis stocks have, you know, made this jump when he made a few comments, what was it, a month or two ago, and have stayed high, shows that it seems like people are believing it a little bit more than they have in a while now.
Yeah, it's tough to. One of the things that's tough to reconcile is like it makes a ton of political sense to do, right?
Hmm.
It's legal in so many states. It is relatively innocuous. There should probably some. I think there should probably be more regulation on some of the higher potency stuff. Um, but its use of it is widespread. I'm in a legal state. You're in a legal state. Um,
Vermont's legal state.
yeah, you guys
Yeah.
love freedom and ice cream. Um, so like there
Yeah,
are a
maple
million
syrup.
reasons
Yeah.
to reschedule it, but then once you've done that, you lose like the political carrot. And I think the trade-off for this administration of losing that political carrot that you can dangle in front of people and say, hey, maybe this
Hmm.
time we'll reschedule it. I think you cost yourself too much by losing that. I don't love that it's entirely a political decision and it is not at all a decision that's based in medical science
Right.
or popular perception or anything along those lines. It's entirely political. But I think you dangle that carrot again, and then like if you lose in the midterms, there's not going to be any kind of impetus to push for
No.
legalization. And if you win, you've won. What
Right.
do you care if it's
Right.
federally rescheduled? You care,
One
but
without doing it. Yeah.
yeah,
Yeah. Okay. All right. Now we have a couple of fun ones, non-investing related. And Madison, feel free to weigh in on these. What's the first one? Next one.
More overrated Halloween month treat, candy corn or candy apples? That's candy corn by a long shot.
I've never had a candy apple.
You said what, caramel apples are the
Yeah.
thing out there?
Well,
Yeah, I've heard
no,
of
they're not
those.
a.
Had those.
I wonder if it's a heat thing, right? Like a caramel apple just melts immediately. Like when we have caramel apples, they have to go in the fridge. They're fine. Candy corn is trash. That's garbage candy.
Candy corn is something that like I think you age out of at like age 10, 11. I feel like I loved it and you burn out on it. At least I did. Really early in life. I think my kids who are 11 and 9 may have already burned out on it themselves. I think like there's only so many candy corn you can have in your entire life, and you hit that. It's a very low ceiling. You hit it,
Once
in
you eat like
bursts.
80 candy corns.
You're right. But I'm not a big candy apple fan either.
Is
I,
that
I think candy corn gets, if we're just speaking overrated, candy corn is rated higher. I mean, you just said you've never had a candy apple. Um, so I'll say candy corn is more overrated.
is so what is the candy on the apple? Is it like it's not obviously it's not a hard candy. It's some sort of like is it just like gooey candy corn sugar?
It's
What
something,
is that
Madison,
candy?
do you know the answer here?
I thought it was like a melted caramel base,
Maybe
something.
I'm saying it wrong. Maybe
No,
it's
a
a
candy
regional
apple
thing. Yeah,
is a thing. It's like the bright red shiny candy apple.
yeah.
I don't know what my accoutrement for my apple is there. Like
Like
if it's
here,
just
people
a
say bobbing for
fondant,
you can bob for candy apples, but maybe it
it's
is
just bobbing for
caramel
apples.
Google says that it's toffee. You're
toffee.
covered. It's a sugar candy coating.
Oh, so I guess maybe
Like
it is a hard candy.
toffee. Yeah.
I've had them. They're not bad, but I don't know. I'm not going on my way to get those. The great things here. Maybe they have these in Arizona or Nashville too.
I haven't had one, but you put anything up against candy corn and I'll choose it.
Well,
Yes,
I was going
same.
to say the things here, cider donuts, with all
Yeah.
the um, apple orchards here. They're delicious.
We like a cider
Underrated.
donut. When we
Yeah,
were in Prescott, there was a like a family farm nearby that used to do fresh pressed cider and cider donuts. They were delicious.
yeah,
My wife bought cider donuts like 2 weeks ago. So yeah, big fan. Not, I mean, obviously cider donuts not in the running. The question itself is which of them is more overrated, and it's
yeah,
candy
yeah.
corn
I would say
because
cider donuts is more towards the underrated
the
spectrum.
the candy apple is unrated. Uh,
Yeah,
Candy corn is whatever rating candy corn has is overrated. That stuff is garbage.
yeah. Like I think the highly rated ones are candy corn and like peanut butter cups, but I would never say that those are overrated. They're properly rated.
No,
They're excellent.
top of the list.
Yeah. All right, last one, Madison. What is it?
Better horror movie franchise, Halloween or Friday the 13th?
Madison, do you have an opinion? Or have you seen either of
Yeah,
those?
mine's Scream. Mine's neither of the above.
Ooh, that's a good one. Oh, that's
They Scream like did you see the Netflix? It was turned into like a series.
oh no, I
They
didn't see
made
that.
all the movies and then I think it's Netflix that has Scream series. There's like 8 or 9 episodes about it. Scream would be my
Scream is the original Scream is excellent.
Yeah,
Um,
it's
Probably
the
better than,
first.
but well, I see. I'm going to go with Halloween over Friday the 13th by a lot. I don't think Friday the 13th is very good, to be honest.
Have you seen Halloween 3?
This is what I wanted to talk about. This is why I put this on there. The best one, or the scare best is long,
Wait,
scariest one.
wait. Are we talking about the same Halloween 3 Season
The
of the
one that
Witch?
does
The
not
one
have
that
Michael Myers, right?
that movie is terrible.
Oh,
That's not frightening and it's terrible. It's
maybe
like a
it's not frightening. I like it though. It's eerie, creepy.
Goosebumps did a better version with the mask, the Halloween mask one. Um, yeah, no, Friday the 13th is iconic. Michael Myers as a villain is iconic, but at least Jason
True.
shows up even in the movie that he's spoiler alert, not the killer for a 44-year-old movie or however old the first Friday the 13th is.
40, yeah, early 80s, right?
Yeah.
Yeah, yeah,
So, spoiler alert, he's not the killer in the first one. But he is in the
right.
movie, technically, in the very end. Michael Myers doesn't even show up in Halloween 3, and it's just a guy with mental health problems, right? Like, he's not
Oh,
a
Michael Myers.
monster.
Michael
Yeah,
Myers.
Michael Myers is just a guy
He's
who's just a
impossible to kill, though.
sociopath. No, he's not. don't they kill him in the last one? They kill
I have, no,
Jason
I
every
have
movie.
not seen any of the last like 7 Halloweens, the Rob Zombie ones or
How
whatever.
can you okay, how can you make a case that it's the better series if you have missed the lion if you've missed 7 of the 9 that they've made or however many?
The originals in both cases, so like as with Scream, have to like account for about 50% of which you when you factor in or calculate which is the better series. I think the original Halloween is way better than the original Friday the 13th, I think.
Yes. Yeah,
And
if you're
the
if you're
zag. I personally like the zag of Halloween 3, where it's nothing to do with Michael Myers.
it
And
was a
I thought it was eerie. My 11-year-old really wants to see it. I don't think he really knows what he's in for with it, but I think
if you,
Halloween's better. But if
the
Madison
original
wants to insist that Scream's better than either, I won't fight you on that.
the original Halloween movie is the best of all of those. Um,
I agree.
if you're drafting a team, if you're like first pick overall is original Halloween, I will not argue with that at all. That movie is far superior to
Yeah.
any of the individual movies. But like if you're judging it on the aggregate movie, on the aggregate series, Friday the 13th, and maybe it's generational, right? Like I was exactly the right age
The fact that Madison
to
said Scream, which came out 15
yes,
years later, shows all of our ages here.
yeah, Scream was very good. It was good and it was meta. Loved me some Matthew Lillard. He's fantastic.
He's the
Always been
best.
Don't spoil anything. Don't spoil
what?
anything.
I'm not spoiling. Matthew Lillard is in Scream. Big news, everybody.
I know.
He
I
is
just tell you.
great. Loved him since like SLC Punk.
He was Shaggy, right?
He
Yeah.
was
He did a
Shaggy.
really good
Yeah.
Shaggy.
Is Madison, have you seen the new Scream from like a couple of years ago? Maybe there are a couple of them now. But if you
Is
have, how is it?
that, did they bring the old cast back for like little
Some
parts
of it.
of it?
Some
I
of it.
think
Yeah.
so. It all kind of blends because we also watched the episodes too, the series. So I don't know I think I probably have. I like Scream a lot.
Yeah, it's good. All right. I think listeners are ready to scream. We need to get out of here. We've gone on long enough. That was fun though. Thanks for joining us on that, Madison, and lending your perspective. Feel better. Um,
Anything for food and movies.
right. I figured that you would enjoy those two topics. Okay. Thanks everyone for joining us for this week's edition of Street Check, and we'll see you again next week.